Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 3rd of November, 2023. Thanks for joining me on episode number 2567. It is non-farm payroll day, unemployment day here in the U.S. as the non-farm number becomes less and less important. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got for this morning. We have a market that has mild risk on as a risk exposure for the overnight session. You could see that the small caps where essentially you get the most bang for your buck when it comes to returns in a favorable market regime. We're at the tail end of a monetary policy regime here, given Wednesday's outcomes. The market believes that the Fed has reached a terminal rate, and so risk is coming onto the table. And it's going into the small caps. Now remember, the Russell has moved lower farther than the others and has some catching up to do. And it's doing that in a hasty way here, being up 1.5% this morning. As far as earnings, we got Cardinal Health. I'm not going to go through those. Everybody can get access to an earnings calendar. There's nothing really significant that came out pre-market. We're talking about Apple. Came out yesterday. This was a highly anticipated stock. Remember, Apple was at 2.72-ish trillion dollars in market cap. It announced $1.46 versus $1.39. You would expect it to pop higher, and it did for a second. So did the NASDAQ for a second, but then it sold off. It says iPhone supply is constrained. The stock fell 3+% overnight. But what we notice is that the S&P did not give up much territory. Even the NASDAQ held on to pretty close to where it was in the day session. Didn't sell off all that badly. I think Apple's like 11% of the NASDAQ. So the unemployment, the Eurozone, Euro area unemployment came in higher than expected. Non-farm payrolls in the U.S. came in soft at 150,000 versus 180,000. Again, this is food for the Fed to hold. Net revisions were way down, by the way. Sorry. By the way, right now, coming across the wire here, the Hezbollah chief, Hezbollah is in Lebanon, southern part of Lebanon, and has been lobbing rockets and drone attacks on Israeli military positions. Apparently, the chief of Hezbollah is about to speak, and that may be market moving, as it's anticipated whether or not he would say that they are going to be more involved with this Middle Eastern conflict. This will have impacts on oil and other commodities. Net revisions on the non-farm payrolls for the last couple months totaled negative 101,000 jobs. That's a lot. Those are big revisions down. Unemployment rate at 3.9% versus 3.8%. It could be, it's not market moving. It could be market moving, I said, because it just creates a bigger mess, right? Crude has been sensitive to how things play out, Yemen getting involved, Iran, and so on and so forth. So they're not very powerful, but they are powerful in Lebanon, and it just brings another country into the fray. So what's left for today? We have a middle tier number here, the S&P Global Composite PMI and Services PMI at 9:45 after the open. A half hour after the open, we have BOE's Haskell speaking. And then we have the ISM Services PMI at 10. And then that pretty much wraps it up until Fed's Bar speaks at 3:30 Eastern today. It is Friday after a big week. We've had a big run up, and we continue to have a run up in the overnight session. So just, be careful on the close. The auction condition in the S&P is trend up. We were consolidating at the upper end of the range of yesterday's range for most of the session yesterday, and we've broken out. It was somewhat, hindsight's 2020, but it was somewhat obvious what is likely to happen with the non-farm payrolls today. You could see algos buying up the market ahead of time, ahead of the number by a few seconds. You can see some pretty good size lifting the offer. But the volume so far has been 271,000 contracts. The inventory is negative 10% because a lot of the volume occurred under yesterday's close, which was right at the high, basically. So that's kind of throwing things off a little bit. The range, 36 points, pretty good, giving us a lot to work with on the open today. Let's take a look at what we expected yesterday. This was what I talked about yesterday. We were looking for it to open, potentially test down a little bit. But the expectation is it would probably take out the 4,300. Provide a small pullback, and then from there we're expecting it to push to 32, to 32.40 and 60, and above there the key numbers around 44.05, as we continue to squeeze higher. So this is kind of in play already. Here's what the day looked like yesterday. We opened up at the upper range of yesterday's overnight session. Yesterday's overnight session had a multi-distribution profile, as we talked about, quite bullish. And we opened and we had the open at the low tick. This is very bullish for those of you who are in the Convergent channel, Maven's channel. I talked about this being very bullish, and the idea here is we're likely, it opened and pushed, squeezed higher quickly, came all the way back, looked like it was balancing, gave us this very balanced profile, and then once the lifting started, it was really about looking for pullbacks to be long, given the fact that we took out the 4,300 right at the open, pulled back just below it to the overnight high, and then we continued higher. So it's really important right now for traders to just step back. Don't get caught up in the order flow, microsecond stuff. Just make sure you're stepping back a little bit and you're keeping track of what the overall picture is. So it's my advice to anyone that asks is to kind of put a chart up that gives you an idea of what's going on if you were standing across the room. And looking at a tick chart from across the room isn't going to tell you much. I generally look at the 30-minute. I correlate that with a TPO or market profile chart, and I look for rotations that way and just lean on key areas that we've pre-identified or market-generated areas. Day-generated prices comprise the open, the full session VWAP, full session mid, the opening swing, the initial balance, and then the RTH VWAP, RTH mid. Those are all market generated prices. And then barring that, the only other areas I look to trade is the price map that we talk about quite a bit here. And you can see there These gray bands on the screen in front of you, those are stock zones created by one of our mavens at Convergent. Does a great job. Those are areas we expect the market to respond. So if you look at what was expected yesterday, we're looking for the market to push to 32, which was right here, right? And then we're looking for it to have a reaction at 40, which it didn't. It almost got there, but didn't quite. And then next we have 60. So 60 is what we hit overnight. 60 right here. You saw it in this map right there. 32, 40, 60, right? 32, 40, 60. And we hit the 60 overnight. We went to 61 and a quarter, small reaction. And what we have in the overnight session is a non-trend profile, completely balanced, lots and lots and lots of energy winding up in there. And then once the number released, we had this push, very clean, clear rejection of the lower auction and where we auctioned yesterday. And this is quite bullish unless we come back and regain yesterday's auction. It's long side or sitting on my hands all day long. I'm not going to look to fade this movement. It doesn't matter what level we're coming into. My goal is to buy dips, so to speak, or to trade pullbacks. There are some interesting ones, by the way. On the non-farm release, I felt that the S&P actually has not been a clean trade. But if you look at the 6E, the 6E was very methodical in the way it was pushing, consolidating, creating local weak highs. You could see these are local weak highs, breaking, pulling back right there, break to the next high, pull back, push, pull back to the last high. You can see these boxes outline these highs, and they've been pretty good until now, which is right before the open, where the book is getting balanced before the U.S. Open. But essentially, that's the plan for today. So look for trend-based structures. I'm expecting a buy imbalance. Now, if we don't get a buy imbalance, that's even better. That's an even better trade because it's likely to catch more people off sides. But the market has to do a lot of work to come back to the point, or to break to the point where it is it becomes viable to test to the downside. If you look at the profile yesterday, you could see there was no consensus on price. We had an open at the low end of the range, a close at the high end of the range, quite bullish. The expectation is the overnight session at some point is likely to push higher. Point of control at the upper end of the range, the volume point of control. Very, very bullish, very likely. What this profile is saying from the from yesterday's session is they did not successfully find sellers. And I'm going to bring you back to the same principle that we trade by in the auction. And that is, the market's main job is to find balance. That's all it is. It's checking prices to find the point where it can match the most buyers with the most sellers. That's the job of every market, be it your local flea market, farmer's market, eBay, whatever it is, supermarket. The idea is to bring as many customers and as many vendors as possible. The advantage with futures, of course, is that we can be the buyer or the seller. We can be the customer or the vendor. And there's an unlimited number of contracts we can put on. It's limited by our account equity and our clearing firm, really, our broker. But what we want to detect in this profile here is that, the question we want to ask is, did they find sellers yesterday? Did the auction fulfill its task? And the answer is no, because we had very active what's called very active price discovery here, finishing at the high, so there's no excess. This tells us the market is likely to continue higher, right? And I told you yesterday, the number we're really looking for next is around 44.05, I think, is the number I threw out. That's this high volume node up here from the balance from way back here, early October, late September. So this is not done. We're opening in a gap today. So we're opening in a gap again. We left a gap behind, which is weak structure. So we got to put that in our back pocket for a later date. Very bullish open yesterday. Very bullish close yesterday. Expecting pretty bullish action. But in general, we expect the market to respond a little bit, given that, you know, some will be profit takers and so on as we come in. I'm talking about OTF, not us traders. And then the expectation is it's very likely to continue to test prices as it squeezes into the 44.05. Once it gets to the 44.05, we expect sellers to jump in. And to show interest in the 44.05. We expect, this is a probabilistic statement, we expect it. We understand and accept that there's a probability that sellers are not going to jump in. If sellers don't jump in, just like they didn't in this 42.65 area here, if they don't jump in and accept balance, then we start to look at what's above this balance area from early October, late September, and then we pull in the information for that. That becomes the next area we expect sellers to come in. So we're thinking almost like a swing trader, but we're day trading. And what we have is, when we look at the overnight session, we have a really weak structure right in there. So anything below the mid today, anything that cuts below that 40 that we talked about, if it gets below 40, then I'm going to start pulling back in on the aggression on the buy side, and it tells me that the market's likely to go into balance, potentially sell back into settlement. That's it. I know that's a lot to cover, and I'm trying to cover it really quick before we go, but you know, overall, what have we accomplished? This is what we've accomplished. We've balanced at the low. We skipped the middle balance zone here. We skipped right through it, which means that if we fall back through and come down here, this area is going to be a huge target and a big area that the market's likely to rest at on the pullback. This becomes an area for long-term investors potentially to load on the long side, as it presents pretty obvious support. Otherwise, we expect the market to move to the next key balance area, again, up here at 44.04, 44.05. Until then, we're in this blunt part of the profile. Until then, it's really just, you know, looking for opportunities, structure trades to get long. Those could be trades against day-generated prices, could be trades against our stock zones, could be trades against whatever. But we're looking to define risk and just go with the flow of the market, okay? So watch the open carefully today. Opening indications are very, very important. I don't know if anybody's told you this, but the way the market opens and how where the market opens and how is a key indication as to what the appetite is early on, okay? So there's that. So what's the expectation today? To open auction probably. We are operating on news, and the SOC, John put it on here, the SOC for the non-farm payrolls is 43.32 right here. 43.32, somewhere right there on this composite point of control, whatever. 43.32 is expected to be the scene of the crime. As long as we're above it and we hold, then we are likely to just continue in the direction of the trend. Okay, that's the expectation. Unless it falls back into yesterday's range, I'm laying off the short side. Short sides may be scalps, but this is an environment where the higher time frame is going to be active. Let's look at crude real quick. We looked a little bit at the 6C. Crude continues to do the thing that I talked about, which is it found balance, came back, sold off, came back to balance, opened in balance right here, sold off, opened yesterday, came right back to balance right here, and then it's opening above balance and it's coming back into balance. As I warned 2-3 days ago, if you're trading crude, this is likely to be pretty whippy because what it's doing is it's rejecting balance, keeps coming back to it. Rejecting balance, keeps coming back to it. The expectation under this scenario is once it moves from balance to the downside and comes to balance, the natural thing for the market to do is to check the other side, go find sellers. So I've been expecting crude to rotate back up to 83. I think it's 83.75 is what I've been talking about. I'm expecting it to rotate up and it's refusing to do so. So it's a trap for both sides, and crude continues to be in this heavy balance area down here. And as long as it is, you have to be very, very cautious committing to a structured position in this zone. Unless crude starts to clear the 83.50 or so, it is very likely to be magnetized and coming back right inside of this balance area, and it's continuing to do a good job of doing that. Okay, NQ, same thing as the ES. NQ, you just have to pay attention to the fact that it took it a while to catch up, but now with Apple behind us, NQ can regain this upper balance area at 15,300 or so. We cleared the 600, the 14,600, the 14,800 was expected to be the next balance point. This is the equivalent of 42.62 for the ES. It has cleared that. Now we're looking for this thing to push to 15,300 as the next key target. Not as bullish as the ES. You notice that it didn't open at the low, but it had Apple in the way, and now that's out of the way. Expect the NASDAQ to be more flowy or more consistent in its directional bias than it has been for the last couple of days. I'll let you go. It is Friday. I was going to do the where are you from thing, but we'll do that next week. Good luck. I'll catch you on Monday. Don't forget to subscribe to like the video, subscribe to the channel so that it can rank a little bit better for other traders to find it. Good luck.